Welcome back to Upside Down Data. It looks like the ETF was not priced in. So we're now seeing Bitcoin trade up at almost 47K as I record this, breaking out of this range. And really the reason, or the likely reason, is that we're getting very close to the deadline for the decision from the SEC about approval of the spot Bitcoin ETF. So that would be the 10th of January. This is the 8th as I record this. And it seems like the market is now rallying. There's indications that it's very likely, as we've known for a long time, that's going to be approved. And now the market seems to be doing some final pricing in before that happens. And then the question will be, once the approval actually happens, assuming that's what we get, but it's very likely we do, what will Bitcoin do after that? So I want to talk about what some of our models are seeing with Bitcoin right now and what context it's going into this ETF approval with. So we can start with our risk model. So this is our short-term upside downside potential indicator. So high values are high risk, low values, low risk. And this cares about moves that play out over days to weeks. So it's a shorter time horizon. And we can see what's been happening more recently is that we did rally pretty hard here, and we saw the short-term UPI shoot up here above zero, but it's now cooled off notably, and it's currently sitting down about negative 1.2, which is notably lower than it had been and also lower than a lot of other crypto assets. And what this suggests is that Bitcoin has room to move again, that instead of getting to a relatively hot level where a correction seemed logical, or at least a slowing down, a consolidation seemed logical, now we're at a place again where further upside might be likely. And so this consolidation we've been in really all the way through this range might be coming to a close, ready for that next expansion. And in the short term, the model suggests that Bitcoin really does have room to work with if it wants to. And this isn't just the case on the short-term UDPI. If we go over to the long-term UDPI, here, this yellow line, we can see also that it's been cooling off, that it had gotten fairly elevated, well up above zero, up to about 1, and now it's been coming back down close to neutral, close to that zero level. Again, suggesting that there is now greater upside potential in that longer term time preference that Bitcoin has been accruing for itself. So it would have room to work with if it wants to. Now, notably, we're not starting this rally out of negative 3.5, for example, like we were back here. And so it would still suggest that any upside we see from here is probably going to be more limited than what we've seen already. That's probably going to be a final step up, or the majority of the move is likely already in for us, unless we are just going to rip off the all-time highs. But I personally don't think that's the most likely scenario. And so it wouldn't surprise me if Bitcoin has some further to run. We had talked in the past about how, for example, 48K is a very logical level for it to tag, even up into the 50Ks would not surprise me. But for us to just go clearing off and ripping to the all-time highs, maybe, but I think that a lot would have to happen. A lot of strength would have to happen to Bitcoin with that already. It would really have to be the case that the ETF was in no way priced in for that to be a likely scenario, in my opinion. We'll have to wait and see, but that's one of the things I'm looking at. So basically looking at these models, if Bitcoin wants to, it has room to work with in the short term. It also has some room to work with in the long term, but we're not at such a lopsided position now as we were back in October of 23 or September of 23 here. That was really the time where it was a deep value zone for Bitcoin. Now, it's still not terrible, but it's not nearly as close to those levels right now. So we'll have to watch and see what happens over the next few days. If we get that ETF approval, how is Bitcoin going to respond? Is this rally we're seeing right now really just pricing in that launch a little bit more, and then once we get there, things won't really react very strongly, or maybe even there's a sell the news event? Or is it the case that once we get there, we actually didn't price it in nearly enough, and off to the races we go? Part of that will probably depend on what happens with the launch itself. Do we get massive inflows into the spot ETFs? Do those break to the upside of expectations? I think if we get larger inflows than expected, that could give fuel to the fire to send things up. But if it's really disappointing, that could be one thing that actually might lead us back down. If it disappoints in people's expectation of the launch, that might be something that makes it more likely to be a sell the news type of event. So we'll have to watch to see how that unfolds. Some things that I'm looking at. And so really what I'm looking at here is that we have room to move in the short term if we want to, but certainly downside is possible. And we're pretty much neutral in the long term. And so there's not really a clear bias one or the other right now. But really, a lot of this doesn't matter if we take a longer term perspective. And this is something that I've talked about a lot, and I'm going to keep coming back to. That as long as it seems like we're in an early bull market, who cares if the spot ETF ends up being a sell the news event, if we rally a bit further, if we go sideways? it doesn't really matter if the longer term outlook remains bullish. And that's why I like to look at some of our longer term indicators to get another sense of what that is, or indicators to give us an idea of where are we in the market cycle. So this what I'm showing you here is our momentum bias indicator, or MBI. So it looks at what is the prevailing momentum in the market. Is it prevailing to the upside or to the downside? And you'll see very distinct patterns of behavior on this metric. In a bear market, you'll spend a lot more time in the red than in the green, and you only have these brief attempts to reestablish positive momentum that get rejected downwards. You look at every single bear market we've had for Bitcoin, you'll see that same type of behavior. But then what you'll do is you'll go into this transition period where you tend to oscillate around zero. And notably on this metric, zero is the average amount of momentum bias in the market. It's a Z-score. So zero is the average, so it's positive, of course. So momentum has been positive for Bitcoin. So being at the average, zero here, means a positive momentum in the market. And then anything above and below are denoted in standard deviations. So when you're oscillating around zero, what that means is you're hanging out at, on average, roughly that positive momentum bias. Nothing too crazy, nothing super extreme. You're just kind of hanging around that average, that expected level. And that's when you'll tend to see price start to move up when you do that. And we've even seen that through 2023 into this year. And then what you see is the bull market, where you go and spend a lot more time in the green than the red. Movies down into the red just quickly get bought up, and you just move back up higher and higher and higher. And that's often when you go into these big blow off tops. And so when you look at what's going on for Bitcoin right now, it looks an awful lot like this transition out of the bear market into early bull market. That looks very much like what we've been in all through 2023 and now into this year. And so what'll be notable is, do we do the same thing we did back here, where we eventually go down and tag red again? Or is this the beginning of that big, more parabolic move? I personally don't think the parabolic move is imminent, although some will tell you it is, and maybe they're right. But this is one of the things we can watch. Now, we have seen this slowly move down. It would not surprise me if we do go back and tag zero again before too terribly long, before moving back up. It tends to be the way it works. And it's really only when you get into this extreme parabolic move that you really spend a lot of time away from this zero level. So you have to wait and see what happens, but I would not surprise me if we come back down. And that would again be consistent with the idea that most of the ETF is priced in. We might have a bit further to go, maybe up into these higher levels, into the 50Ks or something, but then have some kind of a correction, move down to lower levels, let the MBI reset a little bit more down here, maybe dip down to the reds, but then we could go off to the races again. And really, the longer that we spend doing this, probably the higher our parabolic move can go. If we just immediately go into a parabolic move now, I would expect the top of this run, especially if we did break all-time highs, to be notably slower than if we spent more time coiling up. Usually we spend a long time in these early bull markets really kind of preparing ourselves, getting ready for that parabolic move. I think if we just go and get ahead of ourselves too quickly, it could set us up for a situation where we put in a blow off top, not as high as would have been sustainable if we'd allowed the market to really kind of get into that bullish footing more completely before we run. Now that's all speculation, but it's one of the things that I'm thinking about. And so that's where, if we do see a correction, I would not see that as being a bearish thing. Personally, I actually think that would just be a healthy thing that might let us accrue more upside potential for that next run up. And we can see that really looking at the long-term BDPI. We're already starting off from such a high level. Ideally, we'd like to start off from a really low level again, that we let risk reset and then shoot off to that all-time high. And in the past, usually that's what you'll see, is you kind of go into the early bull market, and then off of some really low level, that's when you shoot off to the upside. Maybe October, September was that, but it would be nice to see us come back down here again before we ultimately end up going and doing something like that, assuming we are going into a full bull market. So the final piece of data I want to talk about here is our forecast model. So this looks at the probability of upside 6 months in the future, so medium to long term here. So basically the output is just a probability. How likely is it the price of Bitcoin will be above where it is right now 6 months in the future? What you can see is that we are fully in bull market status with this model. You can see that in bullish times in the market, it behaves very similarly to how it's behaving right now. And that's again where, if we're really thinking in the longer term, this shorter term consideration about what happens to the ETF doesn't really matter if, again, we are in that bull market. And so far, it's been working very well for me to be following the data, in 2023 and into this year. I'm not going to stop that now. And so this is saying bullish, medium to long term still makes sense. So that's still the side I err on. And that's separate from whether or not we'd see a short term correction. I think that's important. If Bitcoin were to actually get to realize some of the short term downside potential, if it would have a sell the news event, that's still not inconsistent with a bullish forecast model. A lot can happen in 6 months. Bitcoin could have a decent correction and then rip out of that, going into a more sustainable rally that maybe that's the rally that takes us to new all-time highs. Those things would not be inconsistent with each other. It's important to keep time frame in mind. Caution in the short to medium term does not mean caution in the longer term. And that's where, again, a lot of us spend a lot of time thinking about the short term because it's just the most reactive thing. There's a lot more to talk about generally in the short term, but really it doesn't matter that much if the longer term outlook is that we're in a bull market. So it's something I like to keep coming back to because it's useful to zoom out, not get too focused on the headlines and on the narratives in the moment, and just think, where are we ultimately heading? And if we really are going to head into a full bull market, then thinking that Bitcoin can go well higher than its prior all-time high is not very implausible. Though I do suspect how we get there could matter. As I was saying, if we just rip off to all-time highs now, we might not be able to sustain that for as long as if we allow for more shaking out of weaker hands, more accumulation in long-term holders, people who are not going to be selling until notably higher prices. So something that we'll have to keep an eye on, but I'm just going to be watching these different models. The short term, they can be a useful guide for how we navigate this ETF approval and what happens after that. But then longer term, just keeping an eye on where are we in the market cycle. And as long as we're in this early bull market type of situation that it looks like we're in, then some of these short-term considerations just aren't all that important. So obviously none of this is financial advice. You should make your own opinions of where we are and where we're heading, but that's just what I'm looking at right now from these models. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on X. A lot of updates about our models and more over there. And go to our website, polaritydigital.io, where you can see live data from our models and more.